So what exactly does the SVB Bank collapse mean for the Toronto real estate market? I'm Michael Ouzas. I'm a realtor in the Greater Toronto area. If you ever want to book in a call with me to discuss what exactly is going on the ground level, go ahead and click that first link in the description down below and we can jump on a call at any time. So there's been a lot going on in the Toronto housing market lately, and the biggest thing that stood out to me is the rise of multiple offers coming back to market. Now, we've been seeing more and more inventory come out in better areas. However, as I've been talking for the last several weeks now, anything that shows really well and is priced really well seems to be getting a lot of attention in today's market. I also think that the numbers were actually surprising in the year-over-year drop from February, the peak of 2022, to February 2023 wasn't as much as people had anticipated, especially when it comes to the 416 proper. Now, something to keep in mind is that the 416 area code, the actual city of Toronto, didn't have the same run up as areas outside of the city. I know when we always hear about stats, they're always using the Greater Toronto area stats and not exactly Toronto proper. Toronto itself is still very vast, so those specific pockets that are highly desirable seem to be still getting a ton of attention. I thought it was really important though to jump over and talk about the collapse of Silicon Valley Bank, which could reverse interest rate hike trends, especially in the US. So the US Federal Reserve was widely expected to raise rates at its next meeting on March 22nd, but the sudden failure of the SVB Bank, the largest collapse of a US bank since the 2008 crisis, has investors slashing their bets. And the bank's failure is sharpening the tensions between fighting inflation and managing risk of financial instability, leading markets to believe the Fed will hold off on further interest rate increases to stabilize the economy. So the failure of the SVB Bank could ripple through the economy, but for now, fear is manifesting itself through a rush of money into government bonds. The rush to the market is raising prices and bringing down interest rates on bonds. Fixed rate mortgages are heavily influenced by the interest rates in the bond market, which makes this the best news in a while for anyone renewing their mortgage or buying a house. So the SVB Bank collapse is a huge deal, and hopefully we don't see more of these come up in the near future. We did see Credit Suisse and UBS are also working at a deal, so it's not just something that we're seeing on this side of the pond. I'm really interested to see how things play out on the banking system side, and in Canada we do have a different system when it comes to banks. I'm not a mortgage broker and I'm not an economist, so this is not something that I specialize in and not something I really want to discuss. But one thing that really sticks out to me is the fact that when we hear about these interest rate announcements, those are typically tied to the interest rates that are variable. So when a variable rate moves up or down, this is what's tied to those announcements. Fixed rates, on the other hand, are tied to the bond rate, and I think that's super important. And we are seeing fixed rates much lower than variable rates right now. So I do think that because fixed rates are lower, it's a little bit different scenario than where we were last year. Last year, fixed rates were much higher. And because variable was so much lower, the buying power was actually higher for those that chose a variable mortgage rate at the time. So it's going to be really interesting to see how things play out as we move along here in 2023. I'm Michael Ouzas. Thanks for watching.